a point is 1% of the loan amount. So if you're borrowing $100,000, a point is $1,000. So a lot of times what you can do is trade points for interest rate. So you can pay, in our $100,000 example, if you paid 3 points, making this up, I don't know what the loan things are right now. If you paid 3 points, the interest rate might come down from 4% to 3.5%. Why? Because lenders are willing to take the money up front and give you a lower interest rate. Okay, so there's that inverse relationship again. Should you do that? How long are you going to stay in the house? This is just a math problem. I mean, nothing you probably did in 3rd grade, but you know, how long are you going to stay? So if you would have paid $400 a month on the regular mortgage and now you're going to pay $350 per month, that's $50 saved. How long will it take for you to pay back the $3,000 in points? Now, there is a deduction that you can get for points paid in the year that you take out the mortgage, I think, still. But you're now capped on the amount of deductions you can take anyway, and with the amount, it's probably irrelevant these days. So technically it's there. Realistically, it probably doesn't count. So I think it's just about how much savings you have and how long you're going to stay. So, and it's even worse, not worse, it's even more complicated than how long you're going to stay. It's how long you're going to keep the mortgage. So I mentioned in the 25 years I've owned my home, we've had about 7 different mortgages. You know, did I keep those mortgages long enough to pay off the point? We didn't pay points, I don't remember. But had I kept each of those loans long enough to pay back the points that I had paid, or did I not? And was I able to deduct it, or was I not? That's really the calculation you're trying to make. So to make it super simple, if you're going to stay more than 7 to 10 years, yes, you might want to look at that as a possibility. But overall, interest rates are super low right now, and I wouldn't want to see you put cash up front if cash up front is an issue, right? If you can't even put 20% down, I don't know if you can or not, but if you can't, you don't want to pay points to lower the mortgage. The better use of your money is to not have to pay private mortgage insurance. That's the big savings, because private mortgage insurance is expensive.